I think you're absolutely right in pointing out all the difficulties. I was listening into an earlier part of the conversation, and I think 3 points to make very quickly. First is it's intriguing that despite knowing that Germany is going into a lockdown today, that we're going to have pain for over the next few months because of these new measures, that we are really seeing the euro rise, and I think that's telling you something that you were discussing just a few minutes earlier, which is that the optimism allows you because of the vaccine. It allows you to look through some period of that. But I think underlying behind that story also is the fact that you've got this massive impulse now on the recovery fund. You've got the ECB taking on a much stronger role in driving this story ahead. And I think that's the reason for optimism. On your second point, I think this is absolutely the key, because the world is really split into two parts. The central banks that would actually be quite happy to allow their currencies to appreciate because they've seen concerns on inflation, primarily in the emerging markets where inflation has been high, has been a concern. But places like Europe, even places like Korea, where inflation is low, and they don't want it going any lower, really. The weaker dollar doesn't really look like that much of a blessing. The good news is what this prompts from central banks around the world, not just the ECB, is possibly keeping your foot further down on the pedal, allowing more monetary easing to remain in place for a lot longer. And just like the times of the gold standard, when pushed into that direction, the guys whose currency is appreciating allow for more monetary easing, and that spills over not only into their economies, but elsewhere as well.
Manoj, the other side of that euro-dollar trade is a big part of why the euro has risen recently, the dollar weakness that we've seen. And today we're looking forward to the conclusion of the two-day Federal Reserve meeting where economists and analysts expect the policymakers to keep rates on hold and maintain the current pace and composition of asset purchases, but potentially look to enhance QE guidance by adopting more qualitative outcome-based language. What are your expectations for the Fed today and at longer term as they look to cooperate with a new Treasury Department head in Janet Yellen?
I think that your last point is absolutely the right one. There's no need for them to do anything dramatic at this point in time. It's probably one of the few occasions on which the Federal Reserve can look for someone who is so understanding of Federal Reserve policies, who understands what role both departments will play. And really, it's a period of cooperation that I think they would not have expected just even a few months ago. So what Janet Yellen can bring to the table in cooperation with the Fed is something that I think they will discuss. They will already be in discussions at this point in time. Over time, I think, given the constraints that they may or may not have post the Georgia elections, they will find a way to make those resources work a lot harder. So don't expect any big changes over here. The interesting parts of the story might just be where some of these guidance dots for 2023 and so on, so forth move. I think that will be an interesting part of the story. Over a longer period, though, that's a really interesting question, because I do think the Fed has painted itself into a tight spot. So they have encouraged more fiscal spending. Chairman Powell was in front of the congressional committee saying we need more fiscal policy. Janet Yellen, in an unofficial capacity, said that, look, the Federal Reserve can't send checks. And they have been very, very vocal about their desire to push up inflation through average inflation targeting. Now, that's all well and good, because the history of meeting inflation targets has not been fantastic over the last 10 years. But I'm in the camp that thinks that inflation is a bit more of a serious problem. So for the first year, I think the Fed may declare victory, and markets will love it because you've got some way of reducing that burden of the huge spike in debt that the world has seen. But over a period of time, if inflation is going to evolve anywhere close to the way I'm thinking about it, I think the Fed may be in a very difficult spot. How will you bring that down without putting the recovery at risk? How will you put it down without upsetting the apple cart of the fiscal expansion that they have invited? I think longer term, they're going to really have to work for their money.